Okay, well, will there be a market melt up for 2025? That is the discussion for this particular situation. December's really kind of come out of the gate looking really good. We hit our initial market target, but I have extended those for what I call our base case for the rest of December. Let's get into it. What I want to do today is I want to talk about our charts and I want to get into colors because nothing puts my eyes in the right direction as looking at colors on a chart. And I'm looking at the chart here, and what I see is I've got this set up into three areas. The bullish area, all right, which is in green. I've got our cautionary neutral area in yellow, and then what I call the bearish area in red. Now, some of this spans back the entire year, and some of it only a couple of months. So bear with me here as we go through these and we discuss the bullish, bearish, and neutral cases for the overall markets. We're starting with the S&P 500. Now, I have extended our base case to 620 by the end of the year. We've gotten as high as 610. A little bit of pullback coming into this week. I have bullish from where we are right now, and actually 600 all the way up to the area of 620. All right. In fact, actually, the bullish case is anything above the most recent highs or the most recent support in November, which was down around 582. Between 582 and about 569 is the yellow area, the cautionary area. That would take us into a new low that we haven't seen since the beginning of November. And then, of course, everything below 569, that's the area where we have resistance back in September, support back in October. Here's that resistance. Here's those support levels just below the 569 area and the 569 lows that happened around the beginning of November 2024. I would say if we get below that, we're making new lows that we haven't seen in a few months. That would set us up for some pullbacks. But so far, we're in the bullish camp for the S&P. Bond market, this particular chart really hasn't changed. Hasn't changed in a year. We've got highs that are above 102. That would be bullish for bonds. Lows would be below 87.50. That would be bearish for bonds. Anywhere between 87.50 and 102 is that very wide neutral range. Neutral is actually good for the stock market. This is what I call the Goldilocks theory. It's not too hot. It's not too cold. It's just right. And just right is what we're looking for stocks. All right. Here's an interesting one. I talked about this last week, but put it into perspective. Look at the lows for 2024. For the beginning of the year, we were down near 27 for the U.S. double dollar index. All right. This is UUP. We ran up into July and made some highs. This pullback here, right? Just pull back to the lows for the last 6 months. That was happening because we got a little bit of a cooling off with the U.S. economy, and inflation was still high, coming down, but still high. And the Fed decided it was time to start cutting rates. And when they did, it was interesting. When they started cutting rates, we started getting hot information about the U.S. economy again. Then we ran back up above 29. In fact, we went to near 30 and a half. We didn't see those kind of numbers during COVID. We pulled back a bit, just below 30. I think anything above 29 is bullish. That 29 to 28 area is our neutral range. And if we go below 28, then that tells us that the dollar is starting to get soft here with UUP. Oil is in a consolidation phase right now. We're into year's end consolidation. Anything above 79 is bullish. Anything below 66 is bearish. We should expect some sort of a breakout to happen really soon. And as we go into the rest of December, this triangle has to break, obviously above that 72 area, below 72 area. And we're going to see that happen real soon. It may dictate where the next move in oil goes. Nothing new about gold. Continues to shine. As you can see, we had that big move up, a little bit of consolidation in the neutral area, then jumps back above in mid-September. We hit that 265-ish area. That was hit in November. Pull back to 238. I'm looking for a double pullback here. We did gap a little bit higher here, 246.44 to start out the week. But basically, it's sum up like this. We're bullish above 238. We're bearish below 218. And we're neutral everywhere in the middle. Still bullish on gold. Bitcoin. A little bit of consolidation happening with Bitcoin as we have been in that. And again, it's been a bullish year all along for Bitcoin. But we ran up into this area here, and I didn't take these all-time highs. I took the gravitational areas right around 70,000, as you can see. There's an area that had a tough time getting through in mid-July, 70,000. 70,000 we went through and then came right back below it, but then after the election, it's been nothing but net for Bitcoin and cryptocurrency. But since then, we've had a bit of a wide range. We're sitting right around, it was 97.6 as I snapped this picture just a short time ago. Here we go. 90, all right, 70 and below. Below 70, we would consider that bearish. Anything between 70 and 90, cautionary. Anything above 90 looks bullish as of right now. Okay, so what I did was I took all of this up and put it together and did some comparisons, and adding all this up to year's end, here's what we see. The trend outlook, that's everything I've done with you to this point, is bullish, because if you take a look at stocks, which are bullish, you take a look at bonds, which are neutral, the US dollar is bullish, oil is neutral, gold is bullish, Bitcoin is bullish. But if you look at the overall trend for the markets themselves, we see bullish outlooks for stocks and commodities. All right, let's take that trend and let's move that over. If our trend outlook is bullish, earnings outlook is bullish because there are no earnings. Now, there are earnings, but we're not getting the clumping of earnings. We're not going to see that until mid-January. The contrarian outlook is bearish because the contrarians are all bearish every time you get a big run up. They look for a pullback. That being bearish, if these guys got bullish, I'd be nervous. But the contrarians are all bearish right now, although the smart contrarians are saying it's a pullback for higher highs. Seasonally, we've got that November to May bullish camp we're in right now. And of course, the election outlook is also bullish. So add it all up, we've got a strong bull in the mid-January 2025.